It's a sad truth that for a lot of traders, telling them to just focus on following your plan or respecting your strategy doesn't work really well. People have been saying this for years. All the gurus online tell you, "Oh, just trade your plan, follow your plan." But that's just not enough for most people. Like, you cannot just get results by forcing yourself to follow your plan. It doesn't work that way. So today I want to take with you a different approach for traders looking for a strategy that works well for them without sticking to a plan that's like very rigid, very tough, or that they cannot stick to. So this will help a lot. Let's dive right in. Alright, so a lot of traders are looking for flexibility when they trade. They have a style, they have an idea of what they want to focus on, what they want to trade, but having a rigid plan, like very strict, doesn't work for all personalities. And if it's the case for you, where you want to have some flexibility more, are able to kind of dictate your trades based on how the market looks, based on the context, then you need to kind of take a different approach from the highly systematic style trading a lot of YouTubers talk about. And if you're someone who loves systematic strategies and like very clear approaches, very clear processes, maybe you're like a software engineer or a computer geek, then fine, that's totally cool. That works for me as well, but not for all people out there. So here's the approach I've been using with the guys I've coached in the past who cannot stick to a plan and want something more flexible for them. It's what I call the trade probability grid. And it's very simple to use, but it kind of takes a bit of time to do it for yourself. Here's what that looks like. On your desk at all time when you trade, you should have something similar to this, which is a grid I've been creating for, as an example, that works pretty well, for one of my strategies on breakouts. Now, my strategy is very clear, but I broke it down here into things that you can do and not do, more flexible, to really make it work for you. Now, the way this works, it's a simple grid. You have your must-haves, which are rules you need to follow for your strategy. It's very essential. Those are things that you need to check. They cannot be negotiable. So you need to be able to check these off before you take any trade. Then, are you disciplined? And this looks like need to have a ranging market for a breakout strategy to happen with similar highs, similar lows. You need to have a clear break of the range for the breakout to be valid. And you need the price to be beyond all the recent highs and lows. So very simple here. You have a range, which is over here. You have a clear breakout of that range, which is this candlestick over here, right here, clear breakout. Then you have no recent highs or lows somewhere in between that range. We break out all the lows of that range. And this candlestick is very clear that it's breaking out of that range in the past. This is what we look like here. Now, the thing is, yeah, this could work well, but it's not very a clear strategy. We don't have any rules that would make it work long-term in the market. I think this would maybe work, maybe probably be break-even, maybe losing money sometime. Because that breakout we had in the past just was a bad breakout. It just lost money after that. We didn't go really far beyond that point. Now, we have some confluence factors, which are kind of factors to help us confirm or add confluence to a trade, make it work better. Now we have when the market is trending prior to the breakout, it usually works better because we go in the direction of that same trend, and it's usually better. We have look left, no past structure near the breakout area. So if you see no past highs and lows near the breakout, that's a good thing, right? Of course, we want to check each of these that kind of match our trade. Then 90% of the body, small wick on a candle that breaks out. So it should be mostly body, no wicks on that candle breaking out of the range, meaning it's a strong candle. Price should be above the 90 MA if it's a breakout, or below if it's a breakdown of that range. RSI should be overbought or oversold if it's a breakdown. So overbought in the breakout, like I've taught before in many videos. I'll leave in the corner right here a video I've done before about how to trade breakouts. And a good strategy I have with the RSI works really well. Kind of counterintuitive, but it's a really good strategy that works really well. So if the RSI is overbought in a breakout, oversold in a breakdown, it works well. Range duration should be at least 20 candle. We don't want these small ranges with like no movement in between. We want to have a clear range, at least 20 candlesticks. Now you want to check how many of these the trade matches. Then you put a score here. And this is where it kind of works really well. Confluence factor here in the legend. 0 of them. So if you have none of them, it's a C-. It's a bad trade. Don't take it. If it's 1 to 2, it's a C+. It's alright, but not that good. If it's 3 or 4 of these confluence factors, it's a B trade. And if it's 5 or 6, meaning either all of them or almost all of them, then it's an A trade. If it's maybe a 6, it's an A+ trade. Now see how you can tweak this to whatever you have. This can fit any strategy you could think about. It's a very simple checklist. You can just check and go on with your trading. And it's very simple to see here, line that says from 1 to 10, how disciplined I am taking this trade. Right? You want to put your score here. So if you're a 10, you're very disciplined. If you're a 1, it's not disciplined. You're just taking a trade for boredom or because you want to overtrade or because you had a loss before. You want to try to avoid this. So this is very clear. You kind of get this clear in your mind, how disciplined you are, and whether you should be in that trade or not in the first place. So the goal here is not to use that same exact trade probability sheet I just showed you to kind of create your own, make your own criteria. I'll have a template for you to download below. You can just check it out. You can just get that template. It's going to be editable on Google Docs. You can just fill in your own things by yourself, pick what you want, and make it your own. It's really the goal here. So be able to take that cheat sheet and adapt it to what you prefer, what works for you, and kind of make it work for your own style of trading. Now once you've done your sheet, you want to go in the market and test it with some live data, which means you take your paper you've just put together, print it on your desk, have it next to you, check each trade you take if it fits these criteria. Then at the end you look at what are these C plus trades or B trades or A trades work well in the market. So you can start to look at your data, your win rate, your average win, your profit factor for these kinds of categories. So you can compare, well, when I have a B trade, it works 60% of the time, but when I have a C plus trade, it's like maybe 50% or 40%. When I have an A trade, it's 80% of the time that it works. So you can kind of filter this out and play with these different criteria and categories to make it work for you. So you want to get some live feedback from the market. Very important to test this out in the market first. You could, of course, do a backtest if you want to, and check these ones and look for all these trades, which one worked better. But then it's really good to test it out and see with live data how it works for you. Last thing is to journal and document. I would highly recommend you go and do a journal for your trading. Whatever you trade, is really important to do that. And one of my simplest journal is through my Facebook. So you can check it out. I'll leave a video link in the corner on how to keep a journal with my Facebook. It's very simple, works very well. You could even tag for these categories, which one is a C trade, which one is a B plus trade, which one is a trade, and kind of make it work that way. So you tag your trades, then you can filter out which trades work best, which trades don't work best, and adjust your grid in consequence. So can you see how there's some work involved here? Trading is not a workless business. You got to put in the work first. But doing this will make it a full trading plan with some flexibility that you can use right now and start to get results from the market. So any questions, leave me a comment below. I want to hear what you think of this, if it's going to be useful or not. I'll have the link below to download this template that you can use by yourself to make it work for you. And if you have any questions, I'll be here to help out and look forward to you crush it. With that being said, I'll catch you back here in the next video pretty soon. Ciao.